Good morning, guys. I hope you're doing well, and welcome to today's edition of the 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with Amana Capital and TradeCaptain.com. Okay, so we're going to start in a minute or two. Okay, good. So we are live. So guys, thanks so much for joining me, and I hope you're having a good morning. Today is January 22nd, 2018. And as I said earlier, my name is Alejandro Zambrano, Chief Market Analyst with Amana Capital and Trade Captain. In the next 10 minutes or 600 seconds, I'm going to provide you guys with a quick update on the markets. But before we start, as always, I need to stress that trading financial markets is unfortunately risky, and there's a general risk that we'll lose all of our invested money. So please bear that in mind before you start trading. Down here, you can click on risk disclosure if you visit tradecaptain.com and read more about the risks involved when trading. Okay, if you're new to this and if you're watching this on Periscope, then this is a live morning update. Conduct these Monday to Friday here on tradecaptain.com in the live trading room. Okay, so let's begin. I'm gonna provide you guys with some live technical analysis and some ideas of where I think the market is. What's the trend, what's the support levels, and what are resistance levels. Okay, so this is the euro, and the market reached these highs already on the 15th, which is Monday last week. Since then, not much happened. The market is just trading sideways. I don't think the government shutdown in the US is gonna affect the markets too much, but if they do, then obviously it shouldn't be a positive impact. I think we can all agree on that. And that could potentially lead to a break to 123.23, which is this high here created on Tuesday last week. So take out the Tuesday high, the market can go up to 125, maybe 125.70, which is the resistance levels I'm watching. The alternative is that we have that correction I spoke about last week, and I'm looking for a correction, a slightly deeper correction this time. So I'm looking for a correction down to 120.85 or 120.80, sorry. And from pretty much 120.80 all the way down to 119.10, I suspect traders are going to look to buy. This level is derived just by taking a Fibonacci from the low to the high. And you can see that this level is slightly above the 61.8% correction level. You can also see that this level here is pretty much the highs here from January 2nd and January 4th. So I am bullish. I do want to buy, but I think it makes sense to buy on dips because of the risk reward ratio. With the risk reward ratio, I mean that a risk 1.4%. If it goes to the high, I make almost 2%, and if it rallies higher, I make 4. That's a good risk reward ratio. The alternative again is the break to the upside. I think if we trade above here, traders are probably buying here, and people that are short are going to be stopped out, triggering gains. And I think traders will probably use this level down here as a stop. So here the risk is about 170 pip for a potential return of about 246. Here's Bitcoin, and Bitcoin remains still bearish. So we talked about this last time, and we said that the market could probably go up a bit, and then it's probably going to pull back. And we just have a new high here, and I don't trust it 100%, but obviously I think I don't trust it enough to be able to say, well, this is the new trend defining high. So right now this is the level that defines the trend. Some people are going to use this trend line, that works as well, but I prefer just looking at highs and lows. And obviously if we take out this high, we would have created a higher high, and that could be a strong hint that the market has bottomed out. But for now, we're not trading above this high, and I'm not 100% sure if I want to call this the trend defining high just yet. So what's the game plan here then? Well, as I said last week, and I said it before as well, traders, for example, I know a guy that manages a fund. What are they doing here? Well, they're buying dips, so they buy some here. Even myself, I bought some, so I have a special portion of my portfolio that just goes to crypto, and I bought with about 25% of my money here. And then when I think that this is bottomed out, I think I'm gonna add more to Bitcoin, and I'll do that when I'm more confident that we have indeed bottomed out and we're gonna head to the upside. Until that happens, this market again is probably down, up, down, and then we'll see if it goes down, but hopefully just goes up, down, and then up. So again, short-term bearish. Let's move along here. Crude oil. Crude oil looks a little bit like the euro, you know, moved all the way up here. This is on the 11th of January, and then on the 15th of January, which is Monday last week, the market reached its high, and since then it's correcting a bit, which is fair. I mean, the market has been rallying from these levels down here. In our case, we turned bullish from these levels, and I think the market needs a bit of a break, and that's exactly what is happening. I think it's having a bit of a break, and obviously if it takes out the high, I'll turn bullish. If not, it might drift a little bit lower to maybe 62.23, and down here, I suspect traders are gonna look to buy. This is the price of gold. Gold is bullish above 1,307. It's very straightforward. It's a bullish trend. It looks pretty much like the euro with a bullish trend overall. The biggest challenge with this market though is that you have some solid highs here. Let me just see if we can get the data. TradingView is taking its time to load today. You can see this high though from September. There we go. That's the rest of the highs. With all these highs, it's gonna be difficult to break. But given the way the dollar index is looking, the DXY, it wouldn't surprise me if we take out the highs. If you look at it, guess what? Crude is gaining. The economy is doing well across the world. If you're not making money now, then well, I mean, I think 95% in most countries, like in the US, the employment rate is at 4 point something. In the UK as well, the employment rate is very low. So most people are working right now. Doesn't mean there's great jobs, but they're still working. So with all of that happening, you'll have higher inflation eventually. And some people are probably going to be buying gold because of that. So I do think and suspect we can take out this level, which is 1,374. Take out that level and the market could rally even higher. I mean, obviously it's not going to go immediately to 1,795, but eventually it could. So I want to watch this and I want to commit when we break this high. Until we break that high, zoom in here and you look here at the daily chart, and we're very close to the prior high, right? So most likely, you know, people that maybe bought here and are working with this range are probably offloading some of the positions. So here, this is 1,326, and we talked about people buying here because the short-term trend is bullish, and we moved up, and did try to move lower, but not much has happened since then. And then we can go higher, and as long as it's about 1,326, I'll remain bullish. Sorry, I'll be bullish from this level all the way down here. So if we revisit, I do think traders are going to buy. We'll go up here, but again, we're close to all those major highs. So being less long is probably better than adding and being really bullish at this junction. Here is the DAX 30. So the DAX 30, as you know, has been a little bit, you know, trading sideways, up and down, up and down. You can see here on this 4-hour chart, and the market took out that high on Friday last week. So the short-term trend is now bullish, and I do think the market could potentially head to the upside. But if one is not long from better levels, then I do think traders are going to buy from a dip, and that's what we're looking at right now. So 1,300 So 13,317 is the level that I would watch, and I'll be bullish as long as it's above 13,090, and then maybe we'll take out this high eventually. And that's it. Those are the main markets that we cover here on TradeCaptain.com. We do have client-only webinars. Next one is going to be next week on Thursday, February 1st. We have these webinars here in the premium section. As the website picks up more and more, we have more activity, we'll conduct these webinars more frequently, but right now is February 1st when we're going to host these Q&A sessions. Now let me just see here if we do have, I can still answer one or two questions. Let me just load the live trading room. Things are going really slowly just because we're broadcasting from this computer as well, so then things just take longer time to load. Oh, if it loads at all, that is. Let's try again. Okay. Good morning, Simon. Thanks so much for joining us. Vasilios is here as well, and MI. Guys, thanks so much for joining me. It's really nice to see you guys here in the live chat. If you have any questions, just let me know, and I'll do my best to try to answer. Anybody else that wants to join, it's always nice to see people here in the live chat box. You just need to have a YouTube account. If you don't have that, I understand you. I didn't have a YouTube account before I actually started to broadcast via YouTube. So if you don't have it, I understand. A good thing with YouTube is that you actually subscribe to channels, so you can obviously set up the settings the way you want to, but you get notifications. You can in essence just get an email when a new video has been added. It's good because sometimes we upload videos that are not part of this 9 a.m. routine, and as well it's a good way if you want to watch these videos but you know you're working or you do other stuff but you still want to have a reminder just in your email, then you can just subscribe to the videos. Okay, I don't have any questions here, so I'm gonna wrap things up. Join me tomorrow at 9 a.m. London time here at the live trading room. Have a great day and happy trading. Thank you.